Greetings everybody, we're now looking at AVI Limited and we are on the monthly chart, and on this particular chart we can see that we have what seems to be a very nice W structure, with this side being the first leg of that W structure and this side being the second leg. To add to that, we also have this zone over here, which is the neckline of this W structure, and not only is it the neckline of this structure, it is also a very strong level of resistance, and that is because we had multiple rejections at that level, and in the future we might potentially get another rejection at this point and the market may push further down, right? To add to that, in fact, before we proceed, I just want to add a neckline to the structure, so just bear with me guys while I do so. Let's have a look. You could say that more or less this whole area over here is the neckline of our W structure, right? And you guys know by now that whenever we have W structures in this manner, ideally we want to see the market closing above the W structure, coming back to the neckline to test it, and at that neckline is where we would look for potential buying opportunities, right? But just keep in mind that the market at this point in time is at this level and has not reached this level at all, right? And remember that as much as we're saying that we want to see the market pushing up to that neckline, breaking it, coming back up and then pushing up, what may actually happen, as I've said guys, is that the market may push all the way to the neckline only to push further down, right? And why do I say so? Another reason why I say that the market may push further down from here is that we have this candlestick over here. It is a bearish candlestick with a tiny body and quite a long lower wick, and it tells us that at the bottom where it ends we have a lot of liquidity at that point, which needs to be triggered by the market at some point or another. And liquidity represents money, by the way, right, at that level over there, right? So there is plenty of scope for the market to push further down to grab that liquidity. To add to that, remember, whenever we have W structures like here, what normally happens is that a lot of traders and investors buy on that second leg of the W structure and they place their stop losses just below that structure, right? So especially for those who are trading, so there's a lot of money sitting just below here, which needs to be triggered by the market at one point or another. So as I said guys, there is plenty of scope for the market to push further down at one point or another. We just don't know when this will actually happen, right? So what else do we see guys in regards to the monthly chart of AVI Limited? Another thing that I see that is also very much important is the fact that we have this candlestick over here. It is a bullish candlestick with a small body and quite a long upper wick, and it too tells us that there's a lot of liquidity sitting at that point at the top where it ends, or where it starts rather, and that needs to be also triggered by the market at one point or another, right? Let's proceed. So what else do we see guys? At this point I don't see much, so what I will do is head down to the weekly chart. So here we are on the weekly chart. Let's have a look. So what do we see on the weekly chart? Just to recap guys, remember on the monthly chart, just bear with me, on the monthly chart we spoke about how we have that huge W structure which has a neckline at that point, and that at this point in time the market is yet to reach that neckline, and that at that neckline we might potentially get a break to the upside of that neckline, or price revert down to this area over here where we have all of that liquidity, right? But yeah, now that we are on the weekly chart, what else do we see? On the weekly chart, the first thing that I see that is also very much important is that we had this M structure over here which had a neckline at that level, right? And just like with W structures, whenever we have M structures, we want to see price breaking to the bottom side of that neckline, heading back to that neckline to test it, and at that neckline is where we would look for potential selling opportunities. So at this point we saw price breaking to the bottom side of that neckline, heading back to the neckline to test it, and at that neckline a lot of traders sold this particular instrument, right? We saw the market pushing further down, right? And then in the future we also saw price coming back to that area again, which is the neckline of this M structure, and is now also a very strong level of resistance, and that is because we've had multiple rejections at that level, as you guys can see right? It's a very strong level of resistance, and there's quite a big chance that we might see price or the market push further down from there. And remember also that I spoke about those candlesticks at the bottom, rather that one candlestick that's carrying liquidity, and the fact that we have a lot of stop losses below that huge W structure that I spoke about. To add to that, we also have this candlestick as well at this point. It is also a liquidity candlestick, and it is carrying a lot of liquidity at that level over there. So there's plenty of scope for the market to push further down, as there is plenty of liquidity right at the bottom, right? Let me just mark this one area as well, right? And then I'm going to add my neckline for that M structure as well, so just bear with me, guys. Let's have a look. So we could say our neckline is here, more or less. And remember, guys, we said that it is the neckline of this M structure, right? And this level over here is also a very strong level of resistance, as we've had multiple rejections at that point, and that potentially we might see the market push further down from there, right? Also, we have this candlestick over here. It's a bearish candlestick with a small body and quite a long lower wick, and it also tells us that we have a lot of liquidity at that point. And remember that liquidity represents money that needs to be triggered by the market at one point or another, right? So from here, what I'm going to do is head down to the daily chart. Just bear with me, guys, while I do so. Here we are on the daily chart, right? Here we are on the daily chart. Remember, guys, right? We spoke about this M structure and this neckline over here, and we said that potentially the market from where it is may push further down, right? So let's look at the daily chart. In fact, before you proceed, I just want to add my daily channel. Let's have a look. Let's have a look. Just bear with me, guys, and just remember that whenever we add any drawings to our charts, we just need to ensure that they are as accurate as can be. Let's have a look. So more or less we could say that this is our channel, our daily channel, that is. Just bear with me, guys. I just want to make sure that it is as accurate as can be. There we go, right? And let's just zoom in a bit, right? Remember, guys, we said that the market at this point in time is at a very strong level of resistance, and we can see that now that we are on the daily chart, we have what seems to be a triple top at that point, as you guys can see, right? And triple tops, right, are very much similar to M structures, in that we also want to see the market closing below the neckline, heading back to the neckline, and at the neckline is where we would sell, right? I hope that makes sense, guys. I hope that makes sense, right? Nonetheless, we're not just going to sell just by virtue of having a triple top at this point, although when it comes to trading, a lot of traders have sold, or rather are in the process of selling at this point, and that is because they see a triple top. However, in my humble opinion, I believe that the safe entry is to wait for the market to close below this level before selling, right? As well as to close below this trend line as well, because that would be confluence and confirmation, and that would be the odds of you being right, in your favor, right? As I said, guys, wait for the market to close below here, and then potentially look for a selling opportunity, right? I would wait actually for the market to reach this point to test it, and around this point is where I would look for further selling opportunities, right? But as far as buying at this point, I would not be buying, because this is a very risky area to be buying, right? As much as, guys, we have what seems to be this triple top at this point with a neckline over here, what may also happen is that, remember, necklines are also areas of, especially in this particular case where we have an information, this neckline is a very strong level of support, and what may potentially happen is the market may push to this level to test this level of support as well as this trend line, and then only push further up from there, right? So that's also a possibility. Hence I say that In as far as selling goes, it's probably best to wait for the market to close below the neckline, as well as to close below this trend line, and then only look for potential selling opportunities, right? So that is it, guys, as far as my analysis of AVI Limited goes, right? Having said that, should the market push all the way to these levels over here that I spoke about earlier, at these levels, I believe is where we should be looking for buying opportunities, right? And our take profit should be around this level over here, right? This would be a very nice area to be looking for buying opportunities, right? I hope my analysis makes sense, guys, and peace out.